One of the most common calls trustees receive sounds something like this. The house sold, escrow closed, so why haven't I received my money yet? And if you're a trustee, chances are you've been asked that question more than once. If you're a beneficiary, you may have wondered the exact same thing. It's a fair question. After all, the property sold, the buyer moved in, the transaction is complete. So, where is the money? Today, we're going to discuss what really happens after a trust property sale closes, where the money goes, why distributions are often delayed, and what trustees and beneficiaries should expect during the final chapter of trust administration. Because one of the biggest misconceptions families have is that when the house sells, everyone immediately receives a check. In reality, that's rarely how trust administration works. I'm Paula Aragone with Aragone & Associates. For more than 23 years, we've helped trustees, attorneys, fiduciaries, and families throughout Orange County navigate complex trust property sales. We maximize value and minimize stress. Strategy is what we do. Throughout this series, we've discussed how to sell a trust property, trustees' responsibilities, beneficiaries' dispute, pricing strategies, timelines, and fiduciary duties. But today, we're going to be talking about what happens after the property sells. Because while many people see the closing of escrow as the finish line, experienced trustees know it's often the beginning of the final chapter. One of the biggest misconceptions families have is that when escrow closes, the beneficiaries immediately receive their inheritance. In reality, the sale of the property and the administration of the trust are two separate things. When escrow closes, the proceeds from the sale are typically transferred into a trust account or an account designated by the trustee and legal counsel. The money does not usually go directly from escrow to beneficiaries. Why? Because a trustee has still responsibilities to fulfill. The property has been sold. The trust administration may not be complete, and that is an important distinction. The sale closes, the trustee's responsibility continues. This is where many misunderstandings begin. Just because a property sold for a certain amount does not mean the entire amount is available for distribution. In fact, the sales price and the amount ultimately available for beneficiaries are often two very different numbers. Before distributions can occur, numerous expenses may need to be paid or accounted for. This can include escrow fees, title fees, transfer fees, attorney's fees, real estate commissions, utility bills, property tax adjustments, cleaning expenses, staging expenses, repair invoices, estate sale expenses, accounting fees, and other obligations of the trust. Many of these expenses are paid directly through escrow. Others may still be outstanding after the transaction closes. The important thing to understand is that the gross sales price is rarely the amount ultimately available for distribution. This is one of the areas that creates the most confusion between trustees and beneficiaries. Beneficiaries often ask, if the house sold, why is the trustee holding my money back? In many situations, the trustee is doing exactly what they should be doing. Experienced trustees and attorneys frequently recommend maintaining reasonable reserves until all known obligations have been satisfied. For example, there still may be outstanding legal fees, final accounting expenses, tax preparation costs, unpaid invoices, insurance obligations, utility adjustments, or other expenses that have not yet been finalized. And here in California, trustees are often advised to consider potential supplemental property taxes, reassessments, and other post-closing obligations that may not be fully known when escrow closes. Prop 19 has created additional complexities for many California families. As a result, trustees are often advised to retain sufficient funds to protect the trust until all obligations have been resolved. A good trustee doesn't just distribute money, a good trustee makes sure there's enough money left to protect the trust. One of the biggest mistakes a trustee can make is distributing funds too early. I understand why it happens. Everyone is relieved. The house is sold, the beneficiaries are waiting, the trustee wants to wrap things up, but distributing funds before all obligations are known can create serious problems later. Imagine making distributions and then discovering additional taxes are owed, professional fees remain unpaid, and counting expenses are still outstanding, or an unexpected obligation appears after distributions have already been made. Now, the trustee may be forced to recover money that has already been distributed. That is a situation every trustee wants to avoid. This is one of the reasons trustees work closely with their attorneys, accountants, fiduciaries, and advisors making final distributions. Moving too quickly can sometimes create more problems than it solves. If you're a beneficiary, communication is incredibly important. In my experience, most beneficiaries are not frustrated because distributions take time. They're frustrated because they don't understand what's happening. The more information a trustee provides, the smoother the process tends to be. Beneficiaries should understand that trust administration often continues after the property sale closes. There may be final accounting requirements, tax matters, outstanding obligations, or other administrative steps that needs to be completed before these distributions can occur. The goal is not simply to distribute money quickly. The goal is to distribute money correctly, and those are not always the same thing. For the attorneys, fiduciaries, and trustees watching this episode, one thing we've observed over the years is that the smoothest trust administrations tend to occur when there's clear communication and collaboration among the trustees, legal counsel, fiduciaries, accountant, and beneficiaries throughout the process. When everyone understands that closing escrow is an important milestone, but not necessarily the final step, the process tends to move forward with greater confidence and significantly less stress. In many ways, successful trust administration is not just about managing assets, it's about managing expectations. If there's one thing I hope you take away from this episode, is this. The sale of the house is not the end of the trust administration. It's simply the beginning of the final chapter. The trustee's responsibilities don't end when escrow closes. It ends when the trust obligations have been satisfied and the beneficiaries receive their distributions properly. And while that may take a little longer than some families expect, doing it correctly protects everyone involved. The goal is not simply to distribute money. The goal is to distribute money responsibly. If you're serving as a trustee, helping a family member administer a trust, or simply trying to understand the next step after a trust property sale, we'd be honored to help. Every trust is different. Every family is different, and every situation comes with its own challenges and opportunities. And if your situation is unique, and many are, we're always available for a confidential strategy consultation to discuss your specific circumstances. We maximize value and minimize stress. Strategy is what we do. I'm Paula Aragone with Aragone & Associates. Thank you for joining me throughout this Trust Property series. Our goal has been simple: to help trustees, attorneys, fiduciaries, and families navigate trust real estate with greater confidence, less stress, and better outcomes. If you found this series helpful, please like, subscribe, and share it with a trustee, a fiduciary, CPA, financial advisor, an attorney, or a family member who may benefit from it. And if there's a trust, probate, or real estate topic you'd like us to cover in the future, leave it in the comments below. Strategy is what we do. And remember, the sale of the house is not the end of the trust administration. It's simply the beginning of the final chapter. Thank you for watching.